Today's video we're going to be looking at profit utilization. That is essentially what businesses choose to do with any profit that they have made. Now, there's always going to be competing pressures on profit utilization. At the end of the day, it's not an infinite amount of money, and therefore businesses have to consider carefully before they choose what to do with any profit that they have made. A mandatory thing that businesses have to do if they make profit is pay tax. Currently within the United Kingdom, the corporation tax rate is 19%. Of course, this may be subject to change in the future. A second thing that businesses may choose to do with any profit that they have made is pay it to shareholders in the form of dividends. Now, private limited and public limited companies are funded and owned by shareholders, and therefore, if a business makes profit, then part of it may go to the shareholders in the form of dividends. A dividend is a percentage of the profit that is paid to each shareholder based upon how many shares they own of the company. Of course, if you choose to pay dividends to shareholders, that means there is less money to reinvest into the organisation. The third thing that we're going to look at in today's video for what businesses may choose to do with their profit is reinvest it back into the business. This can be utilised for any number of things. In fact, a large number of businesses have business growth as one of their aims. Of course, if you reinvest back into the business, maybe shareholders may be less happy because they haven't received any dividends. However, the idea is that if you reinvest back into the business, then the business can perform at a higher standard in the future, and therefore the value of shareholders' shares is likely to increase. Reinvesting profit is beneficial to businesses in comparison to other sources of finance for a number of reasons. For example, reinvesting profit does not attract interest charges like taking a bank loan would. As well as that, reinvesting profit also means that you're not sacrificing further ownership of your business like selling further shares would, for example. What do you think is the best way to utilise profit that businesses have made, and what might it depend on? Leave a comment below.